Hello, Diane here again. Me and my staff are going to go ahead and try to explain to you how to complete a W 4. The new W 4 has 5 steps, and all workers are going to complete steps 1 and 5. All workers. You'll have a different variation in between. And what the new form is designed for is to give you a more accurate amount, give your employer, anyway, I'm sorry, your employer a more accurate amount of how much taxes to withhold, federal taxes to withhold from your paycheck. So we're going to go ahead. They are trying to make it kind of break even. You get too many taxes taken out, and you file your tax return at the end of the year, you're getting a bit large refund. You don't have enough taken out during the year, you file your tax refund by April 15th, then you're looking at paying in. So this new form is designed to give just a little more accusation on how your employer needs to take out your federal taxes. All right, so we're going to go ahead. We won't delay. It's a little, we do both variations. We do the shorter one and then the longer one where you have some deductions, some credits, some exemptions due to children. So we'll go ahead and get started so you can see how this form is completed. All right, thanks.
Welcome to the W4 Form 2020. So let's see how quickly we can fill out this form. Let's walk right through this. So the first one is asking for your first name. In this example, it will be John, last name Joe, social security number, and of course that'll be your address. Oh, don't want to do that. Okay, so let's choose what you are. So if you're single or married filing separately, then you'll click this box. If you're married filing jointly, then you'll click this box. If you're head of household, you'll click on this box. So their definition of head of household is that you're unmarried and pay more than half of the costs of keeping up a home for yourself and a qualifying individual. A qualifying individual, for example, would be a child. So if that's applicable to you, then check this box off. These are different tax rates that they're going to be withholding taxes for your paychecks at. So pick the one that's most applicable to you. Okay, so let's move on to section 2. This is applicable to people who are married, filing jointly, and both spouses are working. This is also applicable to people who hold more than one job at a time. So if you are single and you do not have more than one job, or you do not have more than one job, then you can skip this section and you can move along. And if you're married filing jointly and only one spouse is working, then you can move along. You can go to this section of the video. Please skip ahead. This is inapplicable to you. For everyone else, please stay tuned. So you're here because you're still watching this portion of the video if you're married filing jointly and you and your spouse are both working, or you're single and you hold more than one job at a time. So let me just tell you, for the you hold more than one job at a time, this is what's going on. This is affecting the tax rates at which you should be holding your taxes. Let me give you a quick example so this clicks. So let's just say you're working 10 jobs. This is extreme. Let's just say you're working 10 jobs, you get 10 W-2s, and you make $10,000 at each of those 10 jobs. So you're making essentially $100,000. But at each one of those jobs, they each think that you're making only $10,000 for the year, right? So in that case, they would be withholding at a very low tax rate because they think that you're only making $10,000 for the year. But in reality, you should be withholding at a higher tax rate because in reality, you're making $100,000. So a person making $100,000 should be withholding at a higher tax rate than a person making $10,000. So in that case, you need to tell the payroll systems that information, that you are working more than one job at a time. So if you do not relay this information to them, you're going to be withholding at a much lesser rate than you should, you're going to be under withholding taxes, and then you're most likely going to have a tax balance due when you do your tax return. So that's the theory, that's the mechanics behind this portion. And the same thing goes with the married filing jointly and both spouses are working. It's the same example. So if you're making 100 grand and you do not signify to the payroll system that your spouse also makes 100 grand, then they're going to charge you taxes at a rate of someone only as a household making 100 grand when they should be charging you taxes or withholding taxes from you at a rate of someone or a household making 200 grand. So you need to signify this to the payroll system, and this is the section to do so. So if you want the most precise answer to this section, then you would go to this URL, you'd fill out the questionnaire, and then they would output you the answer, which you would be putting right here. This is all that this leads up to, 4C, the extra withholding amounts. So the most precise way to do this, according to the IRS and according to the form, the most accurate way to do this withholding for this step is to go and do it on this IRS website right here. Okay? But, you can do that if you want. That's your choice. Okay, so the other way, which I'm going to walk you through, is if you want the roughly accurate way. This should be good enough. But if you want the most precise, go to the URL on the IRS website. Okay, and then here's the simplest one. If you're fortunate for, sake of this situation, if you and your spouse are making equivalent amount of pay, similar pay, then rather than walking through these steps, you can just click on this box and you're done. You're done with the step 2. But let's say you're making different amounts of compensation, then you need to either go use the A or use the B. So in this example, we'll go this way. So this is going to take you to page 3. So this is page 1. So right here, page 2. And this is page 3. Okay. So basically, you're going to be filling out this, but let me show you how this works. So let's just say, an example, you're married filing jointly, and then there's a person, one of the spouses makes less, and one of the spouses makes more. So let's just say you start off with the spouse that's making more income. In this example, let's say the spouse that makes more income makes $250,000. They fall in this income range, okay? So you're going to be using this row. And then you identify the spouse that makes less income. Let's just say they make $50,000 in this example. So you're right here, so you're going to use this column. Okay, so where do they intersect? They're going to intersect here. The spouse making more, 250 grand, and the spouse making less, 50 grand. Let's just say 55 grand, so it clearly falls in this column. So it's 10,000, 390. So you're going to use that to put it here on page 3. Okay? Next, what you want to do is go here. Enter the number of pay periods per year for the highest paying job. So, how many pay periods are there? So pay periods depend on how often you get paid. If you get paid monthly, there's only 12 pay periods. If you get paid bi-monthly, that means twice a month, then there's 24 pay periods. If you get paid bi-weekly, then there's 26 pay periods. So let's just say it's bi-weekly, so you get paid every 2 weeks. So enter the number of pay periods. That's 26. So then, just using the division, you'll see that this is equating to $399.62. Okay, so that's the additional amount that you should be withholding each pay period. So again, this is affected by how many pay periods there are. So $399.62 per pay period. So you're going to enter that here into 4C. Okay? So again, this is all coming from page 3. And it says divide, enter this amount here, and step 4C. So that's why we brought it up here. So that should complete your step 2. So if you're in the situation where you're single and you have more than one job, please be using this. Please be using this section. So find your appropriate section. So in this example, we could use the same figures. That if you're making $250,000 at one job, and your second job you make $50,000, then that's going to be $14,540. Okay, that's where they intersect. So then you would go up to here and just pop in that number here. So we'll input 14,540 and adjust your pay periods. And then this would give you the amount that you need to input here. And then you'd put that into where it belongs in step 4 and 4C. So that should get you finished in either situation for step 2. So moving on to step 3, if you just skipped our step 2 tutorial, then this number, the 362, that's from a process that we ran through in step 2, so you can just ignore that. So for your situation, you can just consider that blank or 0. So moving on to step 3, this is the section where they want to know about your credits. The biggest credits, or the most common one, is having children or qualifying dependents. So for each child, you're going to get a $2,000 credits. That's if your income limits apply. If your income will be $200,000 or $400,000 if you're filing maritally jointly, then this will be applicable to you. If you're above those income levels, this will be inapplicable to you unless you're typing in or inputting other credits. So again, the reason why they have these labeled here is because these are the most common ones. So if you have qualifying children and these income limits apply to you, you fall under or you qualify, then this will be applicable to you. So if you have children under the age 17, you get a $2,000 credit per child. So if you have 2 children, then you would enter in $4,000. Dependents, a popular one, a more common one would be qualifying parents. So you take care of your parents, they live with you, you can get a credit for $500. If that's the situation, you can put that here. So this is just asking you for your dependents. So then this will affect how much taxes need to be withheld from you, because this is a reduction of tax. So this needs to be taken into consideration as well. So you'll put that here. Moving on to step 4. So step 4, here we are trying to see what other types of income that you have where no taxes are being withheld. So in this situation, we're trying to see if you have additional taxable income where there's no taxes withheld. And this is the place to make the adjustment for that, to kind of make up for that deficiency. Because if you have taxable income and you're not holding taxes, then you're going to have a shortage. You're going to have a tax balance due, or it's going to chip away at your refund. So this is the spot to make up for that. So here is step 4A, other income. This is asking for the most common types of income where you have taxable income, but no taxes are withheld. That's going to include interest income, dividend income, a lot of times on retirement income, and capital gains too. So take that into consideration, and if you have those types of income, you want to input that here to make up for the fact that you have taxable income and you're not withholding any taxes. So in this example, let's just write $3,000. So let's just say you have some interest and dividend income and it amounts to $3,000. So this will take care of that, just knowing that you have that income and no taxes were withheld. Similarly, if you're going to have deductions greater than the standard deductions, so in other words, if you're going to be taking and claiming the itemized deductions, this is the spot to make that adjustment. So in the situation where you're going to be using the standard deduction, you can just ignore this. You're done. You don't need to input anything in 4B, because the standard deduction is just the deduction that everyone can opt to claim. So let's just say that if you are single and you do not have a mortgage, and you do not make a relatively large amount of charitable contributions, charitable donations, you can skip this. This will be inapplicable to you because you will most likely be using the standard deduction. If you are single and you make let me rephrase that. So if you're single and you have a mortgage of over $100,000, you will most likely need to fill out step 4 section B, this deduction section. Because the reason why I say that is because I'm guessing that you have more than a $100,000 loan, and your interest rate is probably around 3.5%, 4.5%, so approximately 4%. So in that situation, you're going to have mortgage interest. I'm also assuming that you're going to have property taxes. And perhaps in most situations, you'll have state taxes paid if you live in one of the states that pay state income taxes. Maybe you'll have some charitable contributions as well. But regardless, I think that you're going to be above the standard deduction amounts. So in that case, you're going to be itemizing your deductions. So that's why I say if you have a mortgage, if you have a home and a mortgage of above $100,000, you're most likely going to be itemizing as a single person. So in that case, you're going to be wanting to use the deduction worksheet on page 3. Okay? And let's just say that if you are a married person and you do not have a mortgage greater than $350,000 and you do not make a wild amount of charitable contributions, then you will most likely ignore this section as well. 4B, you will ignore this. The reason why I say that is that the standard deduction for married filing jointly is going to be just above $24,000. In that situation, if your mortgage interest is not above about $14,000, then you're probably going to use the standard deduction. So I'm making assumptions here that if you have a $350,000 mortgage, and the interest rate that you receive is about 4%, then the mortgage interest will be about $14,000. You'll have property taxes, state taxes paid, but that'll be capped at $10,000. So that'll get you to the equivalent of the standard deduction amount of about $24,000. So if you do not have mortgage above $350,000 and you are not making a lot of charitable contributions, then you're most likely just going to leave this blank. But if you have a mortgage above $350,000, or you have a lot of charitable contributions, or a combination, or you have a lot of medical expenses that qualify, then yeah, you're going to want to use the deductions worksheet on page 3 for more details, so that you're appropriately adjusting for those circumstances.